So during a time of economic uncertainty and a potential stock market crash, along with a recession, there's a lot going on. And it's always interesting to take a look at different financial YouTubers out there and take a look at their strategies. I have two comparisons here that could not be any different, really. And a lot of them, even though they're talking about the same thing in the same environment, they have two completely different strategies. So I'm going to compare Meet Kevin and Everything Money. I'm going to play a couple of clips from them, and then I'm going to provide my own insight with the stock market and where we are from a technical analysis standpoint. So first, let's take a look at Meet Kevin.
T.S. Lombard goes as far as suggesting that investors today, during these periods of volatility, like what we saw as a result of Japan, will lead investors to do something known as selling into strength. This means they won't necessarily sell on the day that everybody is panicking, but instead, something much like what we saw today will happen. There are two very important things that happen today, and you should pay attention to these, maybe even put a sticky note on your computer. First thing that happened, we had the NASDAQ recover. After we have a Thursday sell-off, a Friday sell-off, and a Monday sell-off, the vast majority of the time, and on average, we are green on the following Tuesday. It's a phenomenon called Bounce Back Tuesday. It's not a big deal. It's very highly predicted. And Bounce Back Tuesday, today in the NASDAQ, occurred with volume that was really light. In other words, the NASDAQ 100 Technologies Index rose almost 2.5% at one point, actually slightly more, on very, very low volume, which suggests people are slowly nibbling, buying. And then what happened right around an hour before the closing bell? Volume increased and the stock gave up the index gave up over 1.5%. A massive movement in the span of an hour for the NASDAQ 100. This is likely because institutional investors, as T.S. Lombard warns, sold the strength. That carry trade is so impactful. Folks, the carry trade can happen again. The Japanese carry trade can happen again. Why? Because nobody wants to buy stocks right now. Okay, maybe people want to buy stocks, but they're fully deployed. Remember this, folks. This is so important right here. Cash on the sidelines for U.S. retail investors and investment firms. Subtitle: Aggregate investable funds as a percentage of equity market cap. Record low. We have not seen investable funds amongst households and investment organizations this low, quite frankly, since the dot-com bubble and COVID. In other words, people are out of moolah to buy the dip.
So while I think Everything Money would agree with a lot of the macroeconomic trends and statistics that Meet Kevin has brought up, their strategy is completely different. Take a look.
Guys, when times get tough, the narrative is going to change, and the narrative is going to be so bad, you need to make sure you keep this video and rewatch it when the times inevitably get tough. Now, you can have bear markets during good times, and you can have bull markets during bad times. But look at the last 25 years. This was a recession. The tech boom happened. We had a recession starting in 2001. Markets went down 45%. This is the great financial crisis. From peak to bottom, 60%. This is COVID. Peak to bottom, 40% drop. And this COVID crash happened in 1 month. Now, why do recessions tend to lead to bear markets? Well, leading up to a recession, things are good, things are great, people feel good, unemployment's low, I have money, stocks are going up, let me put more money in there. Those things are great. When a recession hits, a lot of profit starts to fall. And then people have more fear. Selling happens and it continues to go. That's why we tend to see bear markets when recessions occur. Recessions are inevitable. It's going to happen. What's my plan during recession? My plan, I'm already buying stocks now. My plan is to buy more of them as companies fall and stocks fall. But I want you to remember, the companies I own, the numbers will probably not be as good during a recession because business in general doesn't do as well. There'll be a few companies that do very well. For example, a bankruptcy law firm, they're going to do very well during a recession. Bankruptcies go up, they have more business. But retailers, especially maybe like more niche ones, probably going to have a hard time. Boats, for example, RVs, those don't do as well. Those are luxury goods that people can postpone. Luxury, high-cost goods. But for the companies that are good, like Target, Walmart, all these companies, actually Walmart might do very well during a recession because people have to go save more money. That's why you saw Walmart's same-store sales up recently and Target's were down. Target's kind of the higher end version of Walmart. People probably went and said, let's go to Walmart instead and save a few bucks. But my plan is to buy the companies that I own, the 18 companies I own. I want to buy more of them. And there's a list of 15 other companies that I'd like to own. And hopefully their price falls where it makes a lot of sense. But don't think for a second that I think my companies are going to go up from here. They're not. They're not going to go up. What I do know is if I buy them at the right price and I hold on to them, when the recession finally ends and the economy kicks back on, these companies are going to spring up and they're going to do great.
So I found really interesting with Paul from Everything Money was he wasn't actually talking about buying the bankruptcy company stocks that he predicts are going to do very well in a recession. He's actually talking about tracking some of the retail stocks like Target that when they come down to what his view would be fair value in the recession, he's going to buy and potentially buy all the way down. In the short term, they're going to do probably terrible and probably be in the red. But in the long term, as we come back up out of the recession, because the recession is usually inevitably pretty temporary and they usually don't last as long as the good times, he is going to extremely profit from that. So he isn't looking at the macroeconomic trends and trying to time it per se. He's looking at it from a purely value perspective. On the other hand, Meet Kevin is what seems to be pretty heavily in the market right now. A couple of days ago, he talked about how he bought a bunch of calls. And while he did sell those calls, as I mentioned previously, he also talked about buying puts to cover his long position. So Meet Kevin is trying to time things a little bit more than what Everything Money is. So let's take a look at the technicals from a standpoint with Meet Kevin and see where he is at, because to be honest, I don't think either side is really a bad strategy, but I think where Meet Kevin might be failing is he's not really following technicals the way he should. So let's get into that right now. All right, so we have the S&P 500 open right now. This is the Bjorgum Cloud, which are just a couple of moving averages. And then this is an HA market bias indicator that tracks a longer overall sentiment. On top of that, we have the famous RSI and the MACD. So with a strategy like this is going to generally reflect a lot of other sentiment out there because of this HA market bias indicator. You want to only really go long when the HA market bias indicator is green and you want to play these blue clouds. And you want to do it when the MACD line, which is this blue line right here, goes above the yellow line. And you want to go short when the opposite happens. And ideally with the RSI, you want to buy when the RSI is slightly oversold. And ideally when you have the RSI kind of using this simple moving average as a support, right? So if we're going to zoom in, we have Meet Kevin's trades, or at least overall sentiment and trades recorded right now. So I'm going to bring this up. So I have the red dots for when he announced he's going bearish, and then the green for when he's going bullish. And I have some notes here, right? So on the 11th of July, he bought puts. He said, watch the yield curve, and then he showed out his prices, that his prices are going to go up on his courses. All right. So from a technical analysis standpoint, while he did get it right, and there was a lot of volatility right here, and I'm sure if he went down to the hourly, it would start to sort of break down with these indicators here. There's absolutely nothing that actually shows that you should have gone bearish right here. If we're just talking from the from the indicator standpoint. Now, there are always macroeconomic trends that can help you. And it seemed like this was timed right. So in a sense, the macroeconomic trends that he's been trying to follow worked out right here. However, at the end of the day, indicators can work in a vacuum it's hard for me to believe that macroeconomic trends could, as far as getting accuracy of buying and selling. So, well, perfectly right here is a perfect example. On the 31st, Meet Kevin announced that he bought calls and went bullish, and he was going to essentially buy the dip and that it was going to recover. And he said that because that is when the Fed announced that they were going to lower interest rates in September. Earnings reports came out later in the week that were subpar, so were jobs reports, and that changed his sentiment. And actually, it really just happened the next day. And August 1st, he decided that he was now once again bearish, right? So even on the 1st, from a trading standpoint, we're still above this market bias indicator, so you're still fighting that a little bit. However, he at least, to his credit, he at least now has the Bjorgum cloud working with him. He now has the MACD working with him. This is on the daily. And he has the RSI working with him. However, all of these right now are overbought, right? So if we get a bounce here, and we almost did get a bounce, it just was kind of rejected, we might be testing this HA market bias indicator, which can also be reflected with simple moving averages. We could very well get a bounce all the way back up to the top. And if that happens, I'll be interested to see whether or not he changes sentiment and sells out of his puts. The problem with options, especially if you're not doing credit spreads or something like that, you're going to be highly susceptible to volatility. We have volatility going up, right? The VIX is going up because the stock market right now is going down. This is the QQQ. So I don't have everything money's, buy, sell, tracked per se, because they often will give opinions on the market, but they don't put times on it. So it really wouldn't be fair to do it. It really wouldn't be easy to do. So from an economic standpoint, with the trading analysis, I should say, the indicator standpoint, in the past, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Past 20 days, he's changed his mind 3 times. And it's so far, this past one worked out beneficial for him, although he probably got destroyed on calls. I think he did even mention that. So it's interesting to see how Meet Kevin is saying, cover, but also it's good to have cash on hand. And meanwhile, everything money says, hey, we've had cash on hand and now we're starting to buy. So if you want to go the Meet Kevin route, it's covering your long positions. It's trying to sell out of your positions, hopefully for a profit, to then buy lower, versus everything money is saying, hey, this is where the time is getting good. I'm going to look out for good value. I already have cash on the side and I'm going to buy. That is 2 completely different tales of the same stock market. So let me know your thoughts if you like this content. This is something new I'm trying to put together. It seems like it's going really well. So if there's a YouTuber out there that you favor more than the other, whether it's Everything Money or Meet Kevin, write it in the description down below. If you like this video, the easiest way to help out the channel, seriously, it helps a ton to just hit the like button. It's the easiest way and it extremely helps out the channel. Please do that for me if you can. Otherwise, subscribe, hit the notification bell, and we'll see you next time. Thank you.